We've been involved in some class action lawsuits. Not every case is suitable for class action. In order to bring a class action lawsuit, there has to be an issue in the policy that is common to every policyholder. The reason to bring a class action lawsuit, particularly in the long-term care insurance field, is you want to reach as many people as you can in one case. If there are 100 or 400 or 500 or 1,000 people who are being affected by the conduct of the insurance company, the purpose of the class action suit is to reach all of those people and get all of those people relief in one case. Otherwise, you have to have, first of all, the people who are aggrieved have to know that they have a claim, and then they have to get a lawyer on their own, and you have to bring individual cases for 500 people or 1,000 people. It's just more efficient and reaches more people more quickly if you do it in a class action scenario. And we have brought some class action lawsuits, and we have some pending now. One in particular involved an insurance policy that was written in the early 90s, and it basically, the insurance company sold the policy with what is called an inflation benefit rider. The inflation benefit rider is designed to grow the policy benefits along with inflation, because obviously $100 20 years ago is not the same as $100 today. And somebody who bought a policy with $100 a day benefit 20 years ago can't get the same amount of care today with that $100 as they could when they bought it. So the inflation rider is supposed to grow the benefits in order to keep up with inflation and changes in the marketplace. So as the cost of care goes up, with the inflation rider, the policy benefits go up, hopefully to keep up with the rising cost of care. And the cost of care today, just for an aide, can be, for a home health aide, can be $15, $16, $17 an hour. It's a lot of money. Anyways, in that particular case, the insurance company was not applying the inflation benefit rider properly. They were not applying it to all the benefits in the policy. So what happened was the insurance company over time was telling the insurers that they had reached their policy lifetime maximums and that the policy was over. So all of those people ended up having to go out and hire caregivers on their own, and they spent tens of thousands of dollars doing that. When we got the case, we looked at it and realized that the way the policy was written, with fuzzy language, that the insurance company was not properly applying the rider to all the benefits. So we filed a lawsuit in the United States District Court here in the Southern District of Florida. And we were successful. We got a ruling from the court that said that the policy benefits should have been growing by 8%. And essentially, as a result of that ruling, all of the people that had to spend money out of pocket to pay for care are going to get reimbursements. And as we speak, they're all back on claim. They're all back on care, and the insurance company is paying for it. The average age in that class is about 88 years old. We have people 98 years old who had been cut off from benefits for the last several years, and now they're getting their benefits paid for again, and they're getting quality caregivers. So that was a very successful endeavor, reaching a lot of elderly, needy people, and we're very proud of that case. And there's a really good feeling to know that people are getting taken care of.